Hello everyone, welcome back to my channel. I'm your host Joe Kim with Premier Property Group.
I'm Gavenn Saftich with Fairway Mortgage.
And in today's episode, we're going to be talking about different types of loans. So Gavin, what are some of the most common and most popular types of loans? And would you mind just walking us through that?
Yeah, absolutely. So the most common ones I'm seeing, the Portland metro area, which is kind of where we're based out of, is heavy FHA, conventional VA, and then what we call the jumbo loan are kind of the four main ones I'm seeing currently. They do sprinkle in a little bit of USDA loans, but those are harder to find and a little bit more stricter. But today we'll kind of just be covering conventional FHA, VA, and the jumbo loan.
But why don't we just go ahead and start with conventional, because the name conventional
Easy.
sounds
Start off simple, the one that everyone wants to be in, kind of.
Absolutely.
So yeah, with conventional, the max loan limit we can do before it is considered jumbo, which we'll get into later, is $806,500. I believe is what the most recent one is, and that's kind of the max we can go for single family residences. It does change every year, so they do increase it depending on the county.
Okay.
So us and King County in the Portland metro area have been steadily increasing because home values have kind of gone up. With conventional, you can go as low as 3% down, which is the cool thing that not a lot of people know about. It kind of is a little bit different than the other programs, but at that loan to value, it's very dependent on your credit score. And conventional really likes that credit score to be around 620 for the best benefit of that loan, as well as, the rate's not going to be the best at conventional 3% down. So I like to put people, if you're putting anywhere from like 10 to 20% down, I like to go conventional, because if you put 20% or more down on a conventional loan, there is no mortgage insurance on that loan.
Right. So that's what's commonly known as PMI, right?
Yes, private mortgage insurance.
All right. So let's say I'm a buyer,
Yes.
and I would love to go the conventional route. I have excellent credit score. I have enough money for the down payment and everything, and I have high income.
Yeah.
But what if I want to buy a multi-million-dollar house, like a $4 million home, but then I only have $1 million to put down? With conventional having a loan limit up to, you said somewhere around 800 or something, right?
So 806,500.
Yeah. So then how would a buyer, a very affluent buyer, come up with the rest of the funds for multi-million-dollar properties?
So that's what we kind of call the jumbo loan.
Okay.
It's a lot of people refer to it as a jumbo loan or non-qualified mortgage. So anything below that 806,500 amount, we consider a qualified mortgage. And, anything above that, they consider non-qualified, because it doesn't fall within those loan limits and certain factors that kind of make sure they stay within those boundaries. Whereas, once you get over that price point, which, we're both seeing a lot more now as housing prices come up both, in Oregon and Washington, it's helpful to have more financing options, because, there's very few people that are like, I want to put $4 million down on a house, cash, just make it easy. So there is a lot of jumbo products out there that are awesome.
I've always wondered, in Silicon Valley, how house prices are ridiculous, right? Even if you're working for one of the big major tech companies making $300,000 a year, nobody has $5 million in cash, right?
There's very few people.
Yeah, so I've always wondered, how did those guys, come up with the rest of the money with conventional? But I guess that explains it. They go the jumbo route. And what are some of the other loan options that we should consider talking about, or that the buyers and the viewers should know about?
Is the FHA loan.
FHA, for sure.
Just because rates have just been better. Historically, FHA government rates have been higher, but, within the past 2 years, conventional rates have been the one that have been higher.
No kidding.
Yeah. So it kind of took a flip, and, talking with the people in my office and their experience, they're like, it's a lot of people are pushing them towards FHA just to take advantage of the rates right now. Conventional rates are higher, but they are starting to come down. I told you right before we jumped on here that I was able to get conventional rate lower than I thought I would, and lower than I've seen in the past couple of years. But FHA is a great one too. The minimum requirement for down payment is 3.5%.
3.5%.
So a little bit higher than conventional. But their credit score, you can go down to a 580. So if I can get someone, right on the cusp, their credit repair, something like that, if I can get you to 580, I can jump you into an FHA loan.
Yeah.
You take a little bit of hit with that credit score, because they do, some places have they call it loan level pricing. So, depending on the credit score, the rate might cost a little more. You might have a higher rate.
Right.
But for majority of it, it's if I can get you to 580, I can get you
Yeah.
an FHA loan.
Yeah.
And kind of go from there. So
Yeah.
a lot of the younger buyers,
Mhm.
I kind of point them towards FHA if they're not putting a larger down payment down. Okay.
Yeah.
It's just that ability to kind of stretch that income ratio as much as we can
Yeah.
to get, the largest room of purchasing power.
Okay. Now, are there any cautionary tales when involving FHA loans?
So the one thing I will say with FHA that it's a blessing and a curse. Your mortgage insurance is a little bit higher
Okay.
than conventional, and it stays with you the life of the loan. So that's why I said FHA is kind of the gateway to get you into buying a home, whereas conventional is that long-term plan.
Right.
Because, at that, you don't want to be paying, mortgage insurance for the life of your loan.
Right.
It's not fun, and most, it could be anywhere from $100 to $250 a month.
Yeah.
Just depending on the purchase price.
Yeah,
you do,
that's a good chunk of change.
And that, that's helpful, especially in this economy when, it's so up and down, and it's like, we don't know what's going to happen.
Right.
So FHA just allows you to kind of get into that home, get some equity, and then, we get you to that point of like, once you're at 80% loan to value, then we get you in that conventional, a little bit higher rate, but your payment's going to be about the same, if not lower, because you're excluding, $100, $200, $300 a month on mortgage insurance because it's gone. And with FHA, if you don't refinance out of it, you're stuck with that extra set amount for the life of the loan. Right. So FHA is a gateway into home ownership and just allowing more flexibility to get credit repair, people that aren't putting enough down, like they can't get into that conventional route. They don't want to go that route because the ratios don't match up. So FHA is a great program right now, and you can pair up with a lot of the bond loans that I, offer.
Yeah.
And down payment assistance programs.
And this is why it's so important to work with a mortgage lender who like really knows his craft and just like, takes pride in what he does. Because I've had an experience where I wanted to buy a house and I reached out to a lender. Yeah. They just simply look at my bank statement, my income, and everything, and they're like, "Oh no, you can't get out any loans." I feel like looking back, if I'd known somebody like you who actually was really willing to help buyers out, like I might have been able to purchase something that's a better property for myself and my family, right? All right, so let's talk about one last loan that we're gonna have time to talk about today, which is the VA loan, right?
One of my favorite loans
for
to do.
our veterans and our military service members. God bless you all.
God bless you. Thank you for your service. We appreciate you.
Yeah.
We appreciate the ability to do, what we do day to day because of your sacrifices. So
100%.
And, I'll jump in really quick. Fairway's a big company that supports veterans. Like every Friday, we wear a red shirt that supports our troops. Our golf tournament was, just to raise money to buy service dogs for troops that need service dogs, to continue living. So that's something, not only I hold dearly, but Fairway and, we kind of align together with that.
Great. Yeah.
And, there's no one more deserving to own a home than someone that served overseas, sacrificed for us.
Agreed. Yeah. So VAs are fantastic. Yes. They require 0%, right?
For sure. Yeah. 0% down. You can get a little tricky with VA, but I will say the blessing of VA is they really don't have any limits. And, I've worked on VA loans where they can go to 78%, debt to income ratio back end. They can have so much debt and still buy the house they need to. Yeah. Because they'll say no, but you just go to them and be like, hey, there's no regulations on this. Right. And they're like, okay, cool. Right. I accepted it.
But then you would also still have to be able to pay.
Exactly.
Right? So it's not like
it has to make sense to where they're making enough. And a lot of the times you can increase, if they're getting any VA disability, you can increase that amount. Yeah. To help them qualify for that loan. And I had a very dear friend that served overseas that I was able to help him get into a home. Amazing. 0% down. Yeah. And just so rewarding to be able to be like, hey, you're coming in with like $5,000 after your closing costs are covered. Yeah. That's it. You're getting this house for $5,000. Yeah. That's all we have to worry about. Awesome. And so I love the VA loan. They're very, very simple, very easy, and very rewarding.
Yeah. All right, so today we covered most of like the basic loan options that you may have. And if you have any questions about any loans and you're curious about how much you can actually afford to take out in loans, don't hesitate to reach out to me or my friend here, Gavin, who's a mortgage expert. We'll be more than happy to answer any questions that you may have. And if you decide to work with us or work with him, we'll make sure we'll do anything in our power to make sure that the transaction goes smooth as it can, and we'll just bring it to the closing table.
Exactly. That's our goal.
All right.
Yeah. Even if you can't buy now, it's still getting you a plan to get to that first point. Whether it's investment property, first home, second home, move up, all that stuff. We love helping people out. So,
It never hurts to plan ahead.
Yeah, exactly.
Yeah.
Reach out with questions. That's why we do it.
Yep.
So. Awesome.
Okay.
Well, thank you for having me on.
Yeah, well, thank you so much for watching. Please don't forget to smash the like button and subscribe and hit the notification bell. And I'll see you guys on the next episode. All right. Bye.